Fed rate cuts typically have a positive impact on several stock sector as well. And today we are going to talk about it, okay? Especially those sensitive with interest rates or benefiting from economy's stimulus. Now I will let you all know the main stocks sectors that may benefit a lot from the Fed rate cuts. And we will go through it together, okay? Which is here. You can have a look on the screen as well. Okay, first one, which is real estates and construction sectors. Why? Why is it benefiting real estates and construction sectors? The benefits from rate cuts is because interest rate cuts typically leads to lower mortgage rates and making home loans more affordable for people, which in turn stimulates demand in the real estate markets. As simple as that, understand, right? And for the second one, financial sectors, especially for banks and insurance companies. Like, although rate cuts can compress the bank net interest margin, right? It can compress the interest margins. But because of this as well, they may also increase borrowing demands because interest rate is low and leading to a boost bank lending business. Got it? And for the third thing, which is consumer goods sectors, interest rate cuts reduce consumer borrowing costs, increase disposable income, and encourage consumer spending, right? And so, which means that durable goods and luxury items, in particular, these both may benefit as they often rely on credit consumption. People are using credit consumption, right? And interest rate is low, so people will spend now. All right, and for the third one is technology sectors. The technologies companies often rely on a lot of capital expenditure and innovations. So in a low interest rates environment, reduced financial costs will support their expansion, will support technology sector's expansion and the R&D investment of technology companies, right? And also additionally, technology stocks are typically a growth stocks, and the low interest rates are more favorable for valuations of the company that depending on future earnings, right? For example, what I mentioned, for example, like NVIDIA and Tesla, as you see, both of these stocks has already saw gains on Friday. It already went up by a lot on Friday, and we have already talked about it, right? Okay, for the fifth one, which is the utilities sectors. Utilities companies usually have stable cash flows and a high level of debts. So interest rate cuts lower the cost of financial capital expenditure for this company, which will also increase their relative appeal. So as investor may be more favorable to this stable, which is like high dividend paying stocks in a low interest rates environment. Get it? Now, for the last one, which is industrial and manufacturing sectors. Okay, now rate cuts often signal the Fed aims to stimulate economic growth, which will benefit the industry and also manufacturing sectors, which means like lowering borrowing costs can encourage business investment, particularly in capital-intensive industry fields. And additionally, rate cuts may boost infrastructure projects and further driving the whole demand for it. Get it? Okay, is this part clear? Now, you should be having a better idea of which sectors will benefit from rate cuts and the logic behind it, right? If yes, please give me some response. Okay. All right. Very good. Now, let's look at the next slide. Okay. Okay, looking ahead for this week, as you can see, the AI chips manufacturing giants NVIDIA is set to release its second quarter earnings report this Wednesday after the US market close, which I just now talked about it when opening the class, right? And these reports will reveal whether US companies are still heavily investing in AI technology. And it's actually arguably the most important tech company earning reports of the year, and will determine whether the AI trading momentums can continue or not. Now, NVIDIA stocks has already surged approximately 160% year to date, and contributing nearly a quarter of S&P 500 market value growth. So it's a very strong company, right? And recently, the investor sentiments towards large tech companies has become less optimistic. Since Microsoft, Alphabet, and also other giants released their earnings in July, their stock prices have experienced a prolonged decline, right? If you guys notice that. And for NVIDIA, earning reports will be a very important in determining Wall Street investment directions regarding technology giants. Understand this, right? So, on the data flow, the most significant focus this week will be on the US personal consumption expenditure. Here, the PCE price index, all right, the full form is here. So, the Federal Reserve preferred inflation gauge. Although a rate cut in the September is almost certain already. Now, PCE inflation could still influence the extent of the rate cuts and the Fed's subsequent policy path. So that's why it's so important. All right, then the core PCE index is expected to remain unchanged at 0.2% month over month, with the year-over-year growth rate slightly rebounding to 2.7%. Right, as you can see here. Okay. Now, the overall PCE monthly and also annual rates are both expected to accelerate slightly, to go up slightly. Okay. Now, meanwhile, personal spending for July is expected to increase 0.5% month over month. Now, this may further ease recession concern, but it also could reduce hope for a significant rate cuts. Understand this part? So that's why currently the money makers, the money markets, okay, we call it, anticipate that the Feds will cut rate cuts by nearly 100 basis points by the end of the year, and implying that all three remaining Feds meetings this year will include a rate cuts, with one potentially being a 50 basis point cut. So, and another thing, additionally, with the US president election could also cause the market an instability, right? And since joining the president race, Harris polling numbers have went up, and according to 538, she's now leading Trump in 6 swing states, which is really shaking up the whole elections landscape. All right. Okay, let's look at the next slide. All right, now we come to our part 3. So in our part 2, let's analyze the foreign investment rises in Malaysia's stocks market, which means that more foreign money is coming into Malaysia stocks market. And today we have significant rebound in construction stocks. So as you can see that recently, the Malaysia stock market has faced some downward pressure, right? Market fluctuations are actually very normal part of investing. Surely it will fluctuation. It won't always go up, it won't always go down, right? So for us at Dimensional, identifying for high potential quality asset during the adjustment is actually a key strategy with withstand decline. So let's take a look at the next slide. Last week, you can see that overseas capitals, okay, look at here, overseas capitals enthusiasm for Malaysia stocks market surged dramatically with net purchase up to skyrockets to 1.4 billion in ringgit. So, which means that a 5 times increase from the previous week of just 299.6 million. So, what does this mean? What does this shows? This reflects a strong positive outlook from foreign investor on Malaysia markets. So, according to MIDF research, expect for slight market correction on Friday. Foreign investor acted as the net buyer on all other trading days. And additionally, on Monday, the net inflows of foreign capitals reached an impressive of 574.9 million in ringgit, and also marking the peak of this week capital inflow. So in terms of industry distribution, foreign capital preference are clearly visible, and the financial service sectors has become the focal point for foreign cap investor. With a net purchase of reaching 1.3 billion in ringgit. How about utilities and telecommunication and also media sectors? These sectors also follow closely. Utility sectors attracting net purchase of 118.9 million in ringgit, and telecommunication and media sectors 54.8 million. However, the technologies, consumer goods and service and real estate sectors experienced a net selling by foreign investors with around 140 million outflow in the technology, about 15 million in consumer goods and service, and about 25.9 million in real estates. All right. So on the other hand, local institutional and retail investors have been taking a more cautious approach. A more cautious approach is like wait and see approach, right? So local institutions have been the net seller of the stocks for 2 weeks straight and offloading a total of 1.12 billion in ringgit. So yes, you can see that retail investors have also been a net seller with 284.4 million in ringgit in local stocks. Interestingly, trading volume have been on the rise across the board. Because of what? With foreign capital seeing the biggest jump at 35.8%. But local institutional and retail investors also saw an increase with their trading volumes of local institutions by 33.1% and retail investor by 19%. So, on a positive side, Malaysia export performance has been a bright spot for the markets, and the latest trades reports also shows that exports have already went up by 12.3% year-on-year in July, which is reaching to 131 billion in ringgit. And this is the fastest growth rate in almost 2 years, fueled by strong demands for commodities and electronics products. All right. Now, come back to the Federal Reserve. The Federal Reserve meeting summaries from July have also injected optimism into the markets, right? And the summary reveals that the vast majorities of participants supports a rate cuts policy, which has further boosted foreign investor confidence into emerging markets, which is like Malaysia, and leading to an increased capital inflows into the Malaysia stocks market. All right, now that does indicates that current capital inflow into Malaysia are driven by confidence in the country's economic potential, and also strong export growth, and also expectation of a possible rate cuts by Federal Reserve. But of course, however, market fluctuation always come with a risk and opportunities. You have to understand this. As an investor, we should recognize there's the positive aspect of the market and remain rational and also cautious. So closely monitoring the market's dynamics will help, and also flexibility adjusting an investment strategy to better address future changes and challenges. All right, everyone, are you guys following the law? If yes, please give me some response. Okay. Now for this part, all right. Now this part, let's have a sector and index update. All right. Today, the leading sectors, which is going to be energy and also construction sectors, construction stocks, right? As mentioned earlier, interest rate cuts benefits the construction and real estate sectors, and the rebound in construction stocks has also supported today's index. Oh, from a technical analysis perspective, the support zone is currently at, this is the support, so 1,616 to the range of 1,625. And this is for the support, all right? And for the resistance zone is going to be at 1,651 to the range of 1,660. So, given the relatively positive economic data and the news, the downward space for KLCI index is limited. It's very limited, understand? Now, and currently, the main strategy is buy on dips. Buy on dips when the stocks go down on dips and buy that. And then future market trends will need to be closely monitored of the whole global economic condition, and also the policy developments and the changes in the market sentiment. Understand? And additionally, after a stock's rebound, there may be actions of investor to sell off. So currently focus on should be on swing trading. All right? If you understand this, please give me a response. All right, please give me a response. And then we'll discuss, after this, I think we'll be discussing, yes, we'll be discussing our positioning. Okay, for this part 3, which is we are going to talk about our Touch Gold plan. And so our Touch Gold plan has been running for 9 trading days. And right now, with 11 trading days remaining, how can we accelerate to achieve 100% profits? Okay, right. Okay, right. Now we slowly cover it. Okay, all right. Now, today we focus on premium stocks in SSE markets. And I know that many scholars contacted assistant for quotas appointment right after the last night course, which is very good. So by leveraging the advantages of the price priority, the time priority, and shares grabbing priority, we aim to secure shares of Shenzhen Huaxiang today. Right now, capture the high profits from strong quality stocks in the SSE market, which is this particularly in company again. Now, and today from 2:30 p.m. to 3 p.m., both new scholars and old scholars buy in Shenzhen Huaxiang, right? And the stocks continue to hit the daily limit up again today, which is here. So how many days already? Marking its 8th consecutive limit up. And after a period of consolidations at the bottom, the stocks again began to show unusual, as you can see, it's shown unusual movement previously, and then accompanied by increased trading volume and continuous strong breakouts of resistance right here. And then after the breakout of the resistance, if a strong volume, then now it have an 8 limit up days, and it successfully opens new space for an upwards movement, right? So the recent surge in trading volume, as you can see, the recent surge in the trading volume, this is the, as you said, you can compare, right, in previous now trading volume and previous trading volume. And this indicates that large funds have been entering and blocking the daily limit up. Get it? So whenever investors sell, institutional funds will fully absorb the shares. Why? Because the significant price increase in this company result from institution control and aiming to push the stock price up by acquiring all floating shares in the market before another push up. All right, as you can see here, get up, right? And today, the lower rates is 0.14%, with a market value of 19.527 billion, 19.527 billion in CNY, all right? Now, as you can very clearly see, look at this chart. Now you can very clearly see that in Shenzhen Huaxiang, its distributions of 7 consecutive shares vacuums area, right? Here, then vacuum shares, vacuum areas, all right? As you can see, 1, 2, 3, 4, 5, 6, 7. So, which means it has 7 vacuum areas in the volume profile here. Now, for shares vacuums, as last night I mentioned already, the fastest signals for institutional funds raising is shares vacuum. So a shares vacuum areas refers to the space of this between the two chips density. All right, understand? Now, where there are either no shares or very few shares, which means, and here are considered no shares or very few shares, right? So after breaking through the lower shares density peaks, the stock's price accelerates upwards. And last week, through shares matching trading, we achieved a 33.1% profit on Shenzhen Huaxiang, right? And a lot of you have already enjoyed the profits. Now, if these stocks continue to hit the limit up tomorrow, scholars who successfully bought in will eventually gain 10%. And if it hits the limit up the day after, again, scholar who declared 200,000 of CNY, let's say fair of Shenzhen Huaxiang, will gain 31%. And with 200,000 investment and 80% buying, the calculation is about 200,000 times 80% times 21, right? Which is 33,600 CNY. And if the stocks hits the limit up on Tuesday and Wednesday again, which means that your money of investment could yield of 200,000 could yield about 33,600 CNY. And this is a substantial profit from premium stocks. Understand? And not only premium stocks, but actually, as you can see, dark pool trading stocks in SSE markets. We have also invested in showing a varying degree of increase today as well. Right? Have you guys noticed? And I will summarize this later. Don't worry. Here, I want to emphasize that the importance of operations discipline. I always say operation discipline. We have to align together. Now, we need to reduce market impacts and maintain a trading confidentially. Understand? Why? Because maintaining trading confidentially helps to avoid excessive market reactions caused by leaked information and reducing extreme stock price fluctuation and minimizing trading costs and success rate will increase our success rates. Clear? All right. And of course, we will guide scholars to achieve 410% profit, but practical profits together, right? Of the 400%, 10% profit target. Now, after reaching this target, and then we will collect a profit sharing fee. However, if the profit target is not met, no profit sharing fee will be charged. You have to meet the 410%. Understand? So beside achieving just the 410% profit to get target, of course, I'm here also to aim to enhance all scholars' investment skill through practical experience and making decision more efficiency and also trading more precise. Clear? Is this part clear to everyone? Okay, do you guys need any further clarification? All right. Okay, understand. Clear. Very good. Okay, now for this one, as we look back at the AI trading, last Friday evening, both our AI, GPT-4 Nasdaq Computer and K-Neighbor, right? And also for the GPT-4 United States 500, both of these AI achieved excellent result. And many scholars who use GPT-4 United States 500 fell straight out of 10 days trading days, made over 35% profit with an average returns of 3.5% a day, which is very good. So last night, I mentioned that in context of the rate cuts benefiting emerging markets, right? It's going to benefit emerging markets. So a new trading AI strategy will develop based on the market funds changes. So this will involve capturing super trend and multiverse stocks in the SSE market. All right, the new AI strategy will be on SSE market. And so let me explain a little bit to all of you. For the GPT-4 multiverse, the minimum subscription amount, which is going to be 200,000 CNY, and with a maximum subscription amount of 600,000 CNY. And its expected return rate, which is going to be 56% up to 90%. If a trading days ranging from 16 days up to 22 days. So the lowest daily return is 2.54%. This, I mean, the lowest. Okay, so on the other hand, The Super Trends AI minimum subscription amount is 1 million CNY and give a maximum subscription of 2 million CNY, okay? And for the expected return rates, which is going to be 92% up to 150%. So with the trading day ranging from 20 all the way up to 28 days. All right, so if you calculate this, the lowest daily return is going to be 3.28%. Okay, before that, let me let you all get a better understanding first. What are super trend? What are super trend stocks? Okay, let's look at the screen and go through this together first. Now, super trends refers to stocks with explosive potential in the short terms. Now, where strong trends continue to grow, and super trend stocks are typically driven by macroeconomic factors, technology innovations, social changes, or policy changes, which leading to a significant stocks increase in a short period. And the logic behind investing in super trend stocks is to capture these irreversible trends, right? And achieve substantial returns as these trends develop, which means that the trend is capture the trends that unchanged. All right? Now, okay, here, let me give you guys an example to relate to what is super trend stocks alike. Okay, take a look at this one. This is a SSE stocks, okay? 600611, for example, okay? So as you can see here, from early May all the way to July 2024, in this area, institutional funds continuously accumulate at the bottom for about 3 months, right? Then on July 10, which is right about here, what happens? The stocks hit limit ups and then breaking through the short-term high and then rapidly surge upwards. So from all the way from July 10 to July 31st, it gains about how much? You see, so many upwards. How many it gains? It gains 212.66%. All right? As you can see. So, these stocks, which means that where the strongs get stronger, and this is also an opportunity provided by the Fed rate cuts right now, which is leading to a new investment strategy based on the market condition and the fund flow. And I could say that this is the best time to capture these opportunities. And that's why we are creating these new AI strategies. Understand? Do you guys all see how this concept fits to the overall plans? If yes, please give me some response. As you can see, after the breakout, the volume increased and every day it's going up. So the AI are going to find stocks similar to this, which is what we call super trend stocks. All right. Now, another thing which is, as you can see, why do Wall Street asset management giants engage in portfolio investing? And we often hear this phrase. What phrase is this? Don't put all your don't put all your eggs into one basket, right? Which means that diversified, which has become a well-known concept. But a lot of people understand, a lot of investors understand it, but still struggle to implement it. Why? They understand the need to act off asset diversification, They understand, don't put all your eggs into one basket, but they often fail to achieve it, especially when facing high return stocks, right? And let's look at here. Warren Buffett once says, he says that investing is not a game where the guy with 160 IQ will beat the guy with 130 IQ. This means that to remain invisible in investing, it's not about how high your IQ is or how unique your business vision is. The critical factors is whether you execute quickly when you see an investment opportunities, right? So, by diversifying across SSE market and also US stocks market and Malaysia stocks market, you can see that many scholars can experience the benefits from multi-market portfolio investing. Now, when Malaysia stocks market is volatile with limited profits opportunities, and then we will focus on SSE market. And then, meanwhile, the US stocks market being the largest markets by capitalization, right, benefits from AI round the clock operations and avoiding, which means that you guys can avoid the need of staying up late to monitor US stocks market, which is going to happen in your time most probably around midnight, right? Most of you. So, and also, which means that AI can help us to monitor 24/7 and increase our returns and get you a better sleep. So we have also already proven to all of you that AI works very well and gains absolutely great returns, right? So with the confirmed rate cuts in September, foreign capital that previously flowed out will accelerate its influx into SSE markets. And we can conduct AI trading in SSE markets based on funds movement and using AI to process and analyze massive amounts of data, excel at identifying complex patterns and complex relationship in the market, and also extract valuable patterns from historical data and all this, and most important, make predictions to position ourselves in strong stocks that are looking like this. Example, right? Super trend stocks. Okay. All right. This is the IPOs. Right. Yes, that's correct. Now, last night, I mentioned that recent IPOs on Malaysian and also SSE markets have performed well on their first trading days and have been showing a good returns. And today we can see that an IPO, which is this one is mainly on SSE, the code which is 603207, which is Sanjang, which is a pharmaceuticals company. And this company achieved a net profit margin of around 43.15% in 2003 and ranking among the top in this industry. So the company various external use of the drugs products have maintained a leading market share in China with a stable effectiveness and a broad recognition from their patients, all right? And financially, benefiting from increased product awareness, the company still continue to grow rapidly. So that's why you can see that this company plans, they want to use the funds, they raise funds for new external use of drugs production facilities, and also their new products development, and also their marketing system construction, all this. And of course, another one, which is their brand promotions projects. So the company stocks was issued at 12.47 CNY. And today you can see the highest price reached 39 CNY, which is right about here, right? The highest price. now, which is nearly surge of 213%. Then after that, we trigger temporary trading suspension. All right. But if you successfully subscribe to just 500 shares, you could already make up of 100. No, I mean that if you subscribe of 500 shares, then you could make up 13,000, about 13,000 CNY. And if you subscribe 5,000 shares, which means that you could make up to 132,000 CNY, about that. So the more shares you successfully subscribe to, the more you can earn, right? And yes, today there were some scholars which asked me that how can they increase the chances of winning new stocks subscription? As we know that new stock subscription, when you want to subscribe to IPOs, it's a little bit difficult because of the winning to get the chance is a little bit more difficult. It's a random way, right? So how can you guys increase? Okay, let's review it together. Look at this part. Okay. Now, first of all, how can you increase your winning chances? Which is to increase the market value requirements. The subscription amount for new stocks is linked to the market value of investor holding. So which means that the larger market value of the holding, the greater the subscription amount you will receive. And for example, with premium trading, holding a market value of 300,000 CNY definitely has a higher chances of winning compared to holding 100,000 CNY. And the subscription amount is also larger, which our all experienced scholars should know about this, right? Should know this very well. Our old scholars. And don't worry, for new scholars, you can get to understand it first right now. Next thing, which is going to be, try to subscribe now, which means that max subscription. Subscribe more, max subscription, right? Although the chances of winning is random, the more you subscribe, the higher your chances of getting subscription number, which means that using the max subscription strategy is advisable if you have sufficient market value and can subscribe to more numbers. Get it? Okay, and another thing, which is group subscription. Now, this is another way, which is another thing, which is group subscription. And group subscription usually refers to a strategy where multiple investors at the same time participate in a new stock subscription. Why? To increase the overall chance of winning. So by subscribing with multiple accounts, you will effectively get multiple subscription numbers. So each account chances of winning is random, but as the number of accounts increase, then the overall probability of winning also improve, right? And this is the major reason why many investors choose to group subscription. Group subscription also optimize market value and makes full use of each account market value. So group subscription increase the whole market value, maximize the subscription based on market value, and allow each account market's value to participate effectively in the subscription, which is going to increase the overall subscription amount, right? Okay, now, in this group subscription, it also can increase your winning chances, and this strategy is especially used when there are many new stocks listing, which is going to effectively increase the number of total number of winning. So, of course, now, by using these, small amounts of funds also can be together for a new stock subscription, and it's going to maximize the efficiency of funds utilization and the chances of winning. And the main benefits for these groups of question is that it is increase the probability of winning by joining together, which making better use of different house market value distribution, which is going to potential get your winning chances more. Understand? For this, one understand, please give me a response. All right. Okay. And I also remember that some scholar asked about new stocks allocation. This one, more details about new stocks will be covered in our next class. All right. We will be going to cover in our next class. Okay. For this one, our 410% profit plan. Okay, now dimensional. Dimensional will guide scholars to achieve the 410% plan in 4 stages. As I told before, in 4 stages, right? Ceiling plan, touch goal plan, bonus plan, and elite trading plan. So the first stage, the ceiling plan, has already achieved more than 50% profit. And we are currently in our second stage, the touch goal plan, which is primarily focused on accelerating profit through premium trading, IPOs, joint market makers, dark pool trading. All this, which is using multi-investment approach to aim to boost our returns. Clear? Now, as you can see on the chart here, the touch goal plan includes holding of Theta right now, Sunway. This note, which is under Joint Market Makers 2.0, and WCT, Ganfeng Lichong, Masing, DIY, Marian New Material, all this is under dark pool trading, right? And for Media Group, which is under Joint Market Makers 3.0, this one. And Shenzhen Huajiang Industry, which is today premium stocks. Okay, now, as you can see, another thing, to do Malaysian construction stock search. So, our WCT, as you can see here, WCT went up by 12%, right? And currently holding a 15% profit for WCT. And Masing increased by 2 point something. So now for Masing, the profit is about 14.47%. Sunway went up by 2.99%, which is resulting 25.9% in profit right now for Sunway. And in SSE market, this is SSE market, Gavinitum, it rose by 3.41%, which means that the current profit for this one is 9.36% in profit, while Millennium Materials increased by 2.5%, which means that the current profit right now is 16% for this firm. Media Groups is up by 1.31%, which is showing a 16.3% profit. As you can see, now, given the overall positive market environment, we will continue holding these stocks to maximize our profit. All right? And everything is in a good condition. Now, so please stay alert to notifications from our assistant. When it's time to sell, we will notify you. You will be notified. All right? If you understand this, please give me a reply by saying okay or yes or understand. All right. We are going to our last part right now. And tonight, we'll continue to learn about how to use shares picks methods to identify the stocks with institution participation. And from the 4 stages of institutional market making, which is from accumulation, and then to washing, and then to pulling up price rally, and then to the final stage, which is sell-off distribution. And we already know that the best stocks gains happen during when? During the pull-up rally phase, right? So how can it determine if a stock is in a true pulling up rally phase? We can judge by observing the shapes of the share peaks. Now, the essence of the shares is cost, right? We talked about it. So when a large amount of capitals buy at a stocks at a certain price corresponding to the shares class, because shares is cost appears. So which means that when a stock in this cost zone are heavily sold, then the shares in this area will decrease. In a simple terms, as we talked about, shares represent costs. So now, analyzing shares, we can see the cost for institution and retail investor in the market. And essentially, it allows to uncover the institution underlying position. All right? Okay, so let's take a look. Okay, now, first, let's review the contents from our last class. As you can see on this chart, okay, let's take a look on this chart. The share speed patterns of the stocks at this moment is the share speed concentrated at high levels. Is it concentrated at high levels or is it concentrated at low levels? Now, if the stocks is at relatively high levels, which means that it's high level density. If the stock price is at relative low level, it's a low level density. Understand? So it's actually clear that the share peaks in a chart is in a low level density. All right, okay, now, does it belong to a low level single peak density volume profile? If you think it does belong to low level single peak density, reply with a yes. If you think that it does not, then reply with a no. All right. All right, give me a quick reply. Yes, correct. Yes, it is. It is considered a low-level single peak density, as it in a low-level single density. All right, you can see now. Single peak density refers to the shares peak compacted and gathered in a single area, and single peak density indicates that a stock's cost is concentrated in a small price range, and this could represent either the institution cost or the cost of most retail investor or some institution in the market. From the chart here, we can see that the shares are concentrated between the price of where here 1.46 to 1.64, which is right about here, 1.46 here, okay? And 1.34 is concentrated here, which falls into the category of low level single peak density. All right? Here. Okay, now let's take a look at our next slide. Okay, now in stocks market, institutions have large amount of capital, right? And can control a significant portion of the stocks. And of course, they always pressures retail investor. So how should retail investor avoid institutional pressure and how to play into their strength? First, we need to learn how to analyze the distribution of the shares to gain insight into institutional investor, right? So take a look at here. During the accumulation phase, here is the accumulation phase, okay? Now, let's go through this together. Institution accumulations refers to the process of acquiring low price shares from retail investor. So during this shares transfer process, institution often intentionally suppress the stock price and causing many retail investors to sell their shares. So institutions that continue to buy up the shares from retail investor. When you guys sell your shares, they will stop it. Understand? Now, once the accumulation is nearly complete, then institutions begin to pull up the stock price, which is ending the first phase of accumulation. And this is Sunway. Let's take a look, okay? So all the way from July, here put July to October, right? Yes, July to October is in what phase? Is in a accumulation phase, right? And in early of the stages, as you can see here, during the price pulling up rally, the stock price concentrated around 1.5, right? Which represent approximately the cost of institution. The cost of institution is 1.5, right? Then now you know the cost of the institution. Get it? Okay, now take a look at pulling up the rally phase. And let's go through this together first. After initial institution accumulation ends, institution begins to pull up the price. Of course, after they get enough shares, they need to pull up the price, right? So during this phase, institution will use their shares to suppress the stock price. So when retail investors sell their shares, institution buy them up. Just now we talked about it, which is absorbing the selling pressures, and the shares peak rise, but large portion of the institution shares remain static, and these shares will be held until the stock price reaches a higher point later for actions, right? Which means that after understanding this, you can see that during the pulling up rally, as stock price continues to rise, many retail investors see profits opportunity, and then you guys start buying in here, right? You will start buying in here. And however, a lot of you are fear of giving up profits if the price are too high, and leading to a frequent sell. You guys in here, and then right about here, you want to sell. In right about here, and then you all want to quickly sell. Right in here, and then you want to sell here. Which means that meanwhile, institution will continue to buy whatever you guys are selling here, and then further pulling up the price of the stock price. So as the price keeps rising, institution ultimately benefits from the whole gains of this part, the whole part, right? And this process requires how? They need a favorable broader market condition to proceed smoothly. They need the help of the broader market condition to pull up price easy. So from this chart, we can see that the shares peaks as the stock price increase at where? It increase from this area. It peaks start from here all the way to here, right? Which means from 0.92 all the way to 1.75. 1.75, okay? This is 1.75. So while the other shares are at the lower level, remains unmoved. Okay, now, for the next one, which is the sell-off distribution phase. Now, after the stock price has risen substantially during the pulling up rally, then institutional profits become maximized, right? And at this point, institutions need to release their profits by selling. So to sell, they need to, when institutions want to sell, what they need to do? They need retail investor to buy their shares. That only they can exchange to cash, right? So during a strong price rally, many retail investors seeing potential profits and then starting buying to it, which provide and opportunities for institutions to sell their shares, right? So, as you can see here, look at this one. For example, for this one, which is 5200, the stock price rose all the way from 1.4 to 1.9, right? All the way from 1.4 to 1.9. Now, the shares were concentrated at where? At 1.84 here, as you can see. This line, 1.84, is concentrated here. So, after institutions distribute their shares, the shares peaks below disappear. Now, currently the stocks is fluctuating at high level, right? It's fluctuating at high level. And the shares have not been sold yet. So not all the shares have been sold finished yet. It's still in a selling phase. Understand? Okay, now here we come our final phase. Final phase, which means that, take a look at this one, okay? Let's take a look together. In the final stage of set up institution in order to release the profits from their shares, they need to attract more retail investors into entering the market. As just now I already explained this, right? Institutions often create a brief periods of consolidation. As just now I show you consolidation, right? After a rapid increase of price, consolidation, as you can see, right? To mislead retail investor that it may still go up. Now, many retail investors believe that the rally is not over yet and continue to enter buy in, which helps the institution to achieve their goals of catching out. They'll be thinking, oh, it's consolidation, now is the best time to go in, and then the market will go up eventually after a while. But it's where they are doing their final phase, selling out. All right, and as you can see, this one is the shares from lower area, which is already almost used up, already sold a lot, as you can see. And as you can see here, where is the shares of at? The shares are concentrated at high levels, right? And this is the shares at low levels is already used up. Understand? Which means when they buy from low level here to here is already sold, and now it's concentrated at high levels. Clear? All right. Okay. Now that's it for tonight. Tonight we mainly discuss about how to analyze shares sell-off distribution to gain insight into institution behavior. Now, a day step by step, you are getting better to understand how institution works, right? And as well as we also discuss about our recent position and holding, which is doing very well recently. Now, tomorrow on Tuesday, our key focus will be on AI trading. Okay, this one is our AI trading and premium stocks in SSE markets. So the expected profits from AI trading is the SSE markets are significantly, and this is the best moment, the best timing to enter. So as interest rate cuts are driving the foreign capital into SSE markets and leading institutions to heavily increase their position in strong stocks. So for tomorrow, premium stocks, please remember to contact the assistant to reserve your shares, or anything that you want to understand about the AI, you could also contact the assistant to understand first. All right. And the past goal plan is the phase of from adjustment to success. And in this phase, we will deepen our understanding of institution trading method through joint market makings, premium trading, dark pool trading, and also AI. Understand? And this particular experience, of course, will help you to profit quickly. And another thing, which is after my course finish, after this course finish, make sure to find our assistant to receive your course notes. Then you can see anything that you don't understand. All right, so on Tuesday, which is tomorrow evening at 8 p.m., we will be discussing shares vacuum and the latest market trends and refueling strategies. All right, that's it for tonight. All right, thank you for being such a wonderful audience until now. Okay, see you guys. Bye.